welcome to the CNBC TV 18 special business Sentimeter, where we do a pulse check on the state of the economy across different sectors. Let's talk about a very important bunch of sectors today. The second wave of COVID-19 has ravaged both urban and rural India, pushing the country into an unprecedented health crisis. Nearly 30 states have announced lockdown-like restrictions till the end of the month at least, to contain the spread of the virus. This has resulted in unemployment spiraling to 14.7% in the week ending the 23rd of May, with urban unemployment rising to 17.4%. An uncertain job scenario coupled with an out-of-pocket spending on health has forced consumers to turn to precautionary savings. This has disrupted the consumption cycle, hurting the sales of retail businesses. According to a survey by the Retail Association of India, retailers across the country have seen a 49% degrowth in their sales in April as compared to last year, with retailers across the western states seeing the highest degrowth of 72% in April versus last year. Sales of non-essential items have seen a steep degrowth in April, especially in the sports goods category, with a contraction of 66%, followed by footwear, beauty, wellness, personal care, jewelry, consumer durable, and electronics, as well as clothing. But retail is not the only sector suffering. The aviation sector is also staring at a huge financial crisis given the drop in traffic due to travel restrictions. According to aviation consultancy firm CAPA, airlines will need over $5 billion to survive the COVID impact. In its annual India Aviation Outlook, CAPA says that Indian airlines are unlikely to return to profitability even in FY23. It also says that the government urgently needs to address key fiscal measures for aviation, including bringing ATF under the ambit of GST, reducing excise on ATF, and reducing IGST on aviation spares. Well, that sets the context of what we are going to be discussing here on the CNBC TV 18 Business Centimeter. Let me welcome our guests on the program this evening. Arvind Mediratta, the Managing Director and CEO at Metro Cash and Carry. Also with us, C.K. Venkatraman, the Managing Director at Titan. Kumar Rajagopalan, CEO at Retailers Association of India. And Kapil Kaul, the CEO of the Indian subcontinent at CAPA. Gentlemen, many thanks for joining us here on CNBC TV 18. C.K. Venkatraman, let me start by asking you, we've just taken our viewers through the current context on the state of the economy, on what the macro picture is looking like. But what are you most concerned about in terms of consumption? The expectation is that, look, what happened with the previous wave, once the restrictions lifted, there was that pent-up demand that came back. Do you believe that that is likely to be the case this time around as well?
This time, the overall impact on the mood of the people is much severe. And a lot of us have also been personally affected in some way or the other, colleagues, friends, family members, being touched by the hand of COVID. And therefore, from a consumption point of view, I would certainly expect a slower recovery compared to last time. The second thing is that the extent of the infection of the virus itself, the contagion level of the virus, as well as the virulence, is also a big factor. And therefore, any one of us, our readiness to step out after the lockdown is lifted is going to be much lower than when the lockdown was lifted in 2020. So both on account of the mood for consumption and the fear about contracting the disease is going to keep the recovery much lower than last year. But fortunately, because of the substantial ramping up on the vaccination that is starting, I think in the next 2 to 3 months, in a reasonable percentage of the people that we all know and move around with are vaccinated, I think the recovery will thereafter be steeper. So it'll be slow to start with and steeper thereafter.
Okay. Mm-hmm. Right. So at least for the next 2 to 3 months, you believe that it is going to be a prolonged path to recovery. But, let me just ask you in terms of what the expectation is on the lifting of curbs and the current restrictions. Most states are likely to arrive at some sort of a decision as we approach the 1st of June. But the sense one is getting, and, I had a conversation with the CII President Uday Kotak, and the view seems to be that industry is expecting restrictions to pretty much continue as is, more or less, up until July. What are you working with?
Honestly, we're not guessing anything about it, and we will play it as it unravels.
Fair enough. No point guessing, as you point out. We are just going to have to wait to see what decisions various state governments take. And it is going to be a tough one because, remember, positivity rates across the country continue to be high at this point in time, even though we've seen the active case count decline. But Arvind Bediratta, let me ask you for what you're seeing on the ground, both in terms of consumption patterns as well as the possibility of a recovery once we start to see restrictions being lifted.
Good evening, Shireen. I will say that this time the impact is a lot more severe than what we saw last year. In fact, May is turning out to be the worst possible month in terms of business since the pandemic started. And we are also seeing that a lot of the small businesses have been dealt a body blow. They have been decimated. The small mom and pop shops, which sell non-essential products, are virtually reporting zero sale because non-essential sale has been totally banned in most of the states. Even kiranas, which were the lifeline of the country, and they were the ones which were doing quite well over the last 12, 15 months, their sales are down versus the month of April and also versus last year. The data that we have is in the month of May, kiranas will show a decline of about 10%. The credit in the market has dried up. The distributors are not extending credit to the small shopkeepers, so they are buying only the essentials, the smaller packs, the top-selling articles. We're also finding that some of the large wholesalers who cater to the upcountry markets and the rural areas are also reporting a big drop in their sales. We also know from all the reports that people have also spent a lot of money this time on medical expenses. Almost 75,000 crore to 1 lakh crore is the estimate, which has gone behind medical expenses. And as percentage of household budget, an average household used to spend 5% of their consumption on medical expenses and healthcare stuff. That's gone up to 11% in the last 3-4 months. So overall mood is quite, I will say, somber. The sentiment is quite depressed. The discretionary spends are actually being cut brutally. We are seeing that, for example, the summer season has been a virtual wipeout. So some categories like aerated cold drinks, summer products like air conditioners, refrigerators, ice creams are reporting a decline of 65-70% versus a year ago. And this is a peak season for many of these categories. But there are certain themes that are doing very well. One is a health and wellness theme, as we would expect. So within the consumer space, we are finding that people are buying a lot more of hot beverages, tea and coffee, healthy variants of tea. OTC products are doing extremely well. N95 masks are back in vogue. Earlier, people were spending a lot of money on fashion masks. Everybody's buying an N95 mask. Convenience is another big theme. So people are buying, ready-to-eat products, instant noodles. There's a big demand for cleaning gadgets and cleaning appliances. Value for money is again back in vogue. Yeah. People are down trading to smaller packs. The 5 rupee and the 10 rupee price points are doing extremely well. Even in the biscuits category, while data suggests that there has been a decline overall, but the smaller packs have grown by about 20%. And snacking is another thing, which is probably that's the only area where people are splurging. Snacking, the namkeen snacks, we are seeing a big jump in sales. And at the same time, we can see that toiletries have done very well, but interestingly, shampoos, which you can consider as an essential product, has seen a big decline because people are not going out. Detergent sales are also down. So it's telling you that not only the sales of non-essentials have come down, even some of the core categories are experiencing a decline in sales. And, I just want to add a few things.
You're right in pointing out the discretionary. Yes, go ahead, Arvind.
I think the other thing is the business is getting impacted because of a couple of things which can be easily resolved. One is the restriction on business hours. 6 a.m. to 10 a.m. are the normal business hours across most of the states. As you can expect, nobody goes out and shops at 6 a.m. in the morning because by the time people get ready, it's time for the shops to close down. Secondly, this distinction between essential and non-essential, to my mind, needs to be done away with. Because what is considered to be non-essential by some of the people are essential products for many of the households. Juicer, mixer, grinders, they're classified as non-essentials, but they're very critical for a household. Similarly, cleaning products, because domestic help is not easily available. We are in lockdown situation. People need to buy these cleaning products, and you classify it as non-essential. So it's not overall good, both from the point of view of customers as well as from business standpoint.
No, and I know that this is a point that Kumar Rajgopalan has been making for the last several weeks, ever since we've been debating this business of restrictions, what qualifies as essential, non-essential. Kumar, many thanks for joining us. Just to Arvind's point there, and we've seen this play out across categories where discretionary spending, in his words, has been brutally cut. Now, you've been engaging with state governments, you've been engaging with government authorities across the board. What is the indication that you're getting in terms of what could possibly be eased? We're all given to understand that even if there is an easing of restrictions, it is going to be phased. What is the sense that you get? And more importantly, what is now the ask from the government given where things currently stand?
Yeah, good evening, Shireen. Nice to see you again on this. I'd go with what Venkat said and what Arvind said and try and extend it further. I think this whole timing restrictions, we've spoken about it earlier, and I'm not sure whether the governments are going to do exactly what we're asking them to do, is to try and extend the number of hours, because frankly, if you keep lesser number of hours of shopping, it's only increasing the crowding and it's not really potentializing the consumption, and the need for the citizens are not getting met. One big change that we are seeing, as they've already told, is that some categories which were doing well even last year, things like electronics, sports goods, etc., have also seen a dip this time. And that's again because of this restricted hours, not allowing for even e-commerce to work, no delivery allowed to be coming into the customers' houses, which is quite restrictive even at a citizen's perspective. So I think this is the one big thing. We are talking to the governments. We've not got very clear indication. So I'd not like to come onto a channel and tell that this is the state government that's going to do whatever needs to be done immediately. Talks are on, but we'll have to wait and watch. And this time around, we have to deal with multiple states, multiple local authorities. So that's the big difference between last year and this year. So it's not at the center. It's not from the Ministry of Health at all. The second part that is most important is having landed into this situation and knowing that if we can get vaccinated, things can get better. We are seeing that happening in the US. We are seeing that happening in the UK. We all need to be playing our part to make sure that we can reach that stage of recovery. And for that, the retailers need some real support. Now, within the retail industry, lots of support is happening. The vendors are supporting retailers, the channels are supporting retailers, the malls and the property owners are supporting retailers to try and see if the expenses can be coming down in some form or the other. But the expectation is that the state government, the municipal government also has to come in and not charge unnecessary amount of property taxes, license fees, etc., which is a big burden. At a time when you're not allowing us to access the store, you are charging those charges. So we are talking to every single local government on this, but it's not been easy. We hope some resolution comes through because it's pinching the purses of the retailers, even when they don't get any money. Second part is about the whole thing on employees. This time, not too many of the retailers have actually removed the employees, unlike what happened last year, because we did not know what will happen. Now there's lots more hope with the vaccination. Having said that, the picture is that there's too much of expenditure on the employees and some burden can be shared by way of ESA, CPF, some kind of contribution to happen there. The third is the finance ministry and the Reserve Bank has to come in and play this time, hopefully keeping us as one of those stress sectors. We've asked for it for a long time. 2.0 in that whole thing around the in the ECLGS was allowing retail to be part of it. 3.0 does not have that. So we need money, we need credit, which means moratorium, and definitely there has to be some reduction in the interest rate. I mean, people have to bear the cost, even if it means part of it is borne by the banks, part of it is borne by the government, part will be borne by the retailers. I think that's what is essential now. Most importantly, vaccinate, vaccinate, vaccinate. We really need the guys at the front end to be vaccinated.
Absolutely, and that is the key for the reopening of the economy as well. But Kapil Kaul, let me ask you about the state as far as aviation is concerned. And CAPA has put out its note, which really sums up the pain across the aviation sector. And again, I point out, we're talking about the aviation sector. We're not just talking about airlines, because very often the fixation is just with airlines, but there's a whole ecosystem around airlines that also is struggling at this point in time. Kapil, how bad are things as of today?
Good evening, Shireen. I think, the industry is really at a point of no return. As you have seen in our note, this is back-to-back twin blows, unprecedented blows for an industry which has always been vulnerable to and very sensitive to external changes. This is unprecedented for them, sudden back-to-back blows. But what is the challenge is that I don't think we have fully recognized the extent of this crisis and its long-term consequences. Maybe we recognize partially, but fully I don't think we have recognized and perhaps even acknowledged that this is a grave crisis. It may have a very different industry at when we exit COVID. Until we don't have a recognition and a very serious acknowledgement of the crisis in this country about aviation, I think the crisis will deepen further. The industry is at such a situation, Shreen, that we talked about a $5 billion recapitalization, but that's not a solvent recapitalization. It's just to survive. And the investors will be looking to invest in companies which can access solvent recapitalization. So till the industry doesn't need solvent recapitalization, and I think investing without a solvent recapitalization would be almost like a dead investment with no returns. And how do you address this solvent recapitalization, which to me is the core issue? We've always believed that the government and the industry need to work together, and government must immediately, I think, the first acknowledgement and recognition of this deepening crisis is to ensure that what has been on the table, left for long without any attention, is some core fiscal measures like bringing ATF under GST, some excise duty cuts, eliminating that IGST on spares. These are something which I think is very basics to start with. If we don't get this right, frankly, I don't think there would be any investor who would look at the sector very positively. This, as you would know, that the industry is moving towards a rapid fleet renewal, getting Maxes and Neos. As and when that happens, because you know that Max and Neo gives almost close to 20% fuel reduction, a combination of the government looking at inclusion of ATF in GST, getting some excise cuts, looking at IGST on spares, along with the fleet renewal, I think this would be the first fundamental step for investors to consider and relook at the sector. Second, I think the industry needs to
Kapil, let me just interrupt you there. Because on this issue of ATF, and this has been on the table for so long. Tomorrow the GST Council is meeting, and petroleum, ATF, natural gas, none of it is on the agenda. The council does intend to take it up, but at an appropriate time, and it doesn't look like that appropriate time is anytime soon, Kapil. So given that, when we talk about recap, and the experience from dealing with the first wave, essentially the government's approach seems to be that, look, lifting restrictions in itself is sort of a stimulus. So do you really then expect anything more on that front?
Frankly, I would think that my expectations are I don't have any expectations that will be something significant that will happen. I think what the government may look at is looking at core issues with respect to, as they have recently said, that we will have flexible use of airspace, more privatization, maybe more some regulatory and policy-related interventions. I don't see physical interventions. If we don't have physical interventions, frankly, then we are admitting that the government doesn't want the industry to be in the shape and size that we require, that the economy requires post we exit COVID. Because I think after the basic ATF and the excise cut and IGST talked about, the second is the cash crisis. So now you would need to work with the promoters to see, I don't know how this works, to secure credit lines. And for that, if the promoters don't come to the table and if they're not interested in saving their business, frankly speaking, I don't think they can address a core issue is this cash crisis. So you need secured credit lines, and the promoters need to come and have asset collaterals to support. And third, which I must again re-emphasize, that the third part is to restructure and serious restructuring, not ad hoc restructuring. I have seen the industry being chronically careless about the way airlines manage in high growth environment, especially related to cost and liquidity. So if you have to create a long-term competitiveness, you have to restructure, do a very, very serious restructuring that a cost and business model new emerges. I think if these three steps are taken, that the government does its part in terms of physical measures, the industry works by providing enough in terms of asset collaterals to get some immediate cash. Once that comes in and you have a restructured business model with a cost competitiveness, I think fresh capital will chase. There is a lot of liquidity, Shireen. There is risk capital coming to new airlines. There are people looking at setting up new airlines. So if these three measures are taken, the long overdue, significant fresh capital that is required for solvent recapitalization may happen. So unless and until these three things have to work together, otherwise if one works, the other two don't work, then the outcome would be suboptimal.
Sure. Yes, we've also got a situation where an airline is looking at a potential IPO at this point in time as well. But Mr. Venkatraman, let me come back to you now. And, in terms of what could aid the recovery and the revival, we've just talked about some of the measures required for aviation, hospitality, and so on and so forth. But overall, for consumption, Uday Kotak was talking about the need for direct cash transfer to the bottom of the pyramid to the tune of 1 lakh crore rupees. He believes that that is doable for the size of our economy. What do you believe are the steps that are needed to aid consumption and revival?
Let me go a little more micro than at that level, at the economy level. I think all organizations, particularly in retail, should focus on the extended employee base of the organization, because there is a lot of psychological impact that has happened on employees, off-role employees, relating to COVID. And we need to get all of them feeling comfortable, feeling safe about the situation for kickstarting the supply side of the consumption, which means from a COVID support point of view, which means from a vaccination drive support point of view, all companies should step in. And of course, it would be wonderful if the government were to declare the retail workers, like Kumar has been battling for declaring them as also frontline priority workforce. And I think if we were to emphasize the safety of our people and the security of our people, I think that would be a huge step in at least making the consumers worry less about stepping out, because the brick and mortar retail industry will depend on people coming to the stores for the consumption to kickstart. In wave one, because of what each company did, the environment that was created in the stores was sort of safe. But in today's level of contagion and virulence, we need to step on the game, and if everyone is vaccinated, at least with the first shot, every store employee. And if the country were to know that, certainly the public would be more willing to step out and go to the stores.
Yes, provided that the public itself has got at least one shot, if not two, and we're far away from that being a reality as of today. Arvind, I'll give you the final say now. In terms of the road ahead, we've talked about the pain and the pressure points, but what's the expectation now on the road ahead?
I will say that things can bounce back within next 3 to 4 months. But there are 2-3 things where we need support from the government. One is the restrictions. I understand that restrictions are required to avoid crowding, but the timing of 6 a.m. to 10 a.m. is the most inconvenient timing for a normal shopper. Even if they want to restrict it to 4 hours, can it be 12 to 4 or 2 to 6? So it's easier for people to shop once they're done with the morning chores. The second thing is vaccination. And as Venkat said, I think it's very important to prioritize the frontline retail workers, treat them at par with, maybe not par, but next in priority after the medical workers, and allow us to prioritize the vaccination for them. And I'm talking here about not only people who are on our rolls, but also the people on the contractual basis who are working with us on contractual basis. And third is, just stop the distinction between essential and non-essential. It's weird that you have this distinction only for brick and mortar and you don't have it for e-commerce, because e-commerce in many states is allowed to do both. So there has to be a level playing field between the e-commerce sector and the brick and mortar sector. Frankly, I understand that the finances of the government are really strained, so we may not be able to get a big fiscal stimulus. But if they just ease out the restrictions which are there, prioritize vaccination, I think that will be good enough. And companies also have reserves to, go through this crisis for another 2-3 months, to live through this and bounce back. So I expect if vaccination is prioritized and restrictions are eased up, things will come back to normal by August or so. Because as I said, there are still some states which are doing well, where the restrictions are relatively more relaxed, like Telangana, etc. So that's what our expectation is. We're not expecting any package from the government. We just want. Yes.
Yeah. And easing of the restrictions. That is the hope. In fact, the Maharashtra Health Minister at this point in time saying that the lockdown is likely to continue, but there are likely to be some further relaxations that will be announced, and I would imagine that will be the case across most states. Gentlemen, thanks very much for joining us here to take us through where you think things currently stand on the consumption front and on business confidence. We will, of course, continue to pick up on this conversation as we see things change on the restrictions. Thanks for your time, and we'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment.